But Mahesh Vyas joins us, Indian CEO with CMIE, and let's first paint the big picture before we go to him. We have seen India's GDP go down from 7.5% to sub 7%. The government spending has slowed down. Unemployment data is not looking very encouraging, and in general, there seems to be a slowdown, which is now visible in high frequency data points. Mr. Vyas, good morning. Thank you for joining us. What is your read of the economy? The slowdown, what we've seen in last 2 quarters, is that a real deal?
Well, there is a slowdown. We saw it coming from approximately June of 2024. The beginning was the rains weren't as good as they were supposed to be. They were delayed. That led to sowings getting to be slow. The recovery in agriculture was much less than was anticipated because, mind you, the previous year was a negative. So we expected a substantial jump up in agricultural production and agricultural incomes, but that did not happen. And then one saw slowly many other fast frequency indicators, particularly in infrastructure and energy, starting to slow down. So slowing down of the economy became evident. Started getting evident in June, became very clear in August. And then as the GDP numbers came out, it only confirmed our fears that the economy is headed towards a slowdown.
Do you think this is a cyclical slowdown which could come back as government spending will come back as inflation stabilizes?
I'm not too sure about that. We need to see this in the light of the long-term trends in the Indian economy. And the biggest worry is that we haven't seen actually investments come up in a big way. So in the recent few years, we have seen a mix of many things. 3 years ago was a recovery from COVID, but mind you, before that, in 2019-20, there was a serious slowdown. Then after the COVID, there was a recovery, but after that, there's been a lot of Capex spending by the government that has helped keep that growth rate a little high. As government spending has reduced, we have seen other factors come together, and this is a slowdown which requires more effort to come out of. It's not going to come out automatically.
Okay, point taken. But do you anticipate a big pickup when it comes to that, government spend or not? Because if you go by reports, it does seem like the government is likely to meet its budget estimates by almost 15 to 20%.
Well, the first few months, at least till October, have been negative on Capex spending. In my opinion, it will be difficult for the government to cover up in the remaining months. And even if it does, it will not show up in any real sense in the current year. So I would be a bit more conservative on that. I wouldn't bet all my horses on government pickup in the remaining parts of the year and see a pickup from there. Mind you, private sector is not investing, and that's one big concern that has remained with us for now a fairly long time. So we got to figure out where is the growth going to come from. Government seems to be a bit tired of spending. Private sector is not yet getting enthusiastic. So it's only the household sector. But where does the household sector get so much energy from, given that employment hasn't been very good?
What do you think is keeping the private sector at bay? I mean, just remove the last 6 months, but before that, growth was strong, the sentiment was strong, there were all of these Capex announcements being made, the companies were reporting great numbers, there was that wealth effect which was there everywhere, corporate credit was available very easily. Then what was stopping the private sector to participate?
That's $1 million question. You're absolutely right. Everything was good for the corporate sector to actually invest very aggressively. Go back, they got a big tax break before COVID. Then they got this big benefit of gaining market share from the unorganized sector as GST played its role, as COVID reduced the competition from the small scale sector to some extent. Profits of the corporate sector was excellent. There was no problem in the balance sheet of the companies. Credit was easily available. Interest cover, you look at any number of the corporate sector, they were doing excellently. But they decided to park their money in financial investments, in liquid investments, and were very reluctant to put money into fixed assets. So just to give you a number on this, in the last few years, some 5-6 years, we have seen the non-finance companies' nominal growth in net fixed assets to be of the order of 5%. And the investment in financial instruments, which is largely mutual funds, debt funds, and so on and so forth, is twice as much, is like more than 10%, it's around 12 to 15%. So the corporate sector has the resources, but it seems to be taking a decision. No, this is not a good time to put money into net fixed assets. That's worrisome.
Interesting point that you're making. It's not just the financialization of savings which is at play when it comes to the retail and the household sector. Clearly, corporates are also taking that route. So instead of the fixed assets, they're putting it into financial assets. Very interesting there. But given all of this backdrop, what's your sense of the budget 2025, Mr. Vyas? Do you anticipate that the government will loosen the purse string a bit more and, kind of go away from the glide path of fiscal deficit? Or what are the ways that they can, perhaps spur the private as well as the public consumption?
It's very difficult to bet what the government is going to do or even guess what it is going to do. This government is particularly very guarded in telling you what it's likely to do. But we can certainly draw some inferences from the past performance of this government. We have had a stable government for a very long time, and therefore one can figure out their mind in a sense. And it looks like they will not go away from fiscal consolidation, being conservative on the fiscal deficit. They are unlikely to splurge money on the budget day. Announcements are not going to be populist. There is no reason for them to be very populist. So I think it's going to be the usual stuff. They will still say, they are still likely to say that we will spend on Capex, we intend to spend on Capex, and the fiscal deficit will remain in control. No big changes can be anticipated at the moment.
Urgent need for government to come out and say, look, we need to change direct taxes, we need to change the tax where, in a sense, corporates have got a tax rate cut, but individuals have not got it?
I don't know. That's very difficult because there is this whole debate, and I think what I understand from the debates that I have heard, the government is unlikely to tax the richer more. They are unlikely, and most of the people in the direct tax bracket are, of course, the relatively richer people. So one is unlikely to see any major change in taxing them more. The scope to reduce taxation for the middle classes, I think, is very limited. I think what needs to be done is heed the advice of economists like Karthik Muralidharan, who says spend the money more wisely. That's where the biggest buck is.
We've seen a very strong wealth effect which has got created in India. Real estate, stocks, gold. And that wealth effect should have translated into either bumper spending or it should have translated into better consumption. How come that wealth effect is not getting translated into numbers? I mean, FMCG companies are struggling, auto sales are peaking out. Where is all this wealth effect going?
So this is a slightly more complex problem. FMCG companies are facing a problem because the lower end of the pyramid, the bottom of the pyramid, is tiring out. The lower middle income and the people lower than that as well have got less spending power because the unemployment rate has been high at 8%. Wage rates have not been growing for them. Large scale of the employment is of very poor quality. So that exhaustion of spending power at the lower end of the pyramid, at the bottom of the pyramid, is what is hurting the FMCG companies. Insofar as passenger vehicles peaking out, etc., I think that's partly cyclical. I could see it coming back in some time. People are consolidating the way they deal with their wealth. Mind you, the uncertainties right now on which way will the rupee go, the dollar go, what's going to happen to the global markets is a little up in the air. As this clears in the next 12 months or so, the wealth effect on investments will happen, but not much on consumption. Finally, how much can the rich consume? This is more about changing your your wealth allocation between financial assets to fixed assets to maybe some luxury items. But that's going to have a very minor difference on the economy as a whole, I mean.
Yeah, the top end, as it is, forms a very small percentage of the total population. So, of course, how much can they consume? But, sir, just before I let you go, I understand it's a bit of a crystal ball gazing and it's difficult to, hazard a guess what the government is thinking. But given the history, what do you think will be the focus area in terms of the sectors? I mean, of course, manufacturing got a big boost, railways got a big boost. This is supposed to be a year of reforms for defense. Clean energy has been the focus area. What do you think is something that one needs to watch out for when it comes to budget 2025?
Well, I'd like to read from what comes in the budget announcements is what's the government's learning from its efforts to grow the manufacturing sector. Mind you, employment solutions are largely in the manufacturing sector and also in the services sector. But we have tried a lot to kickstart manufacturing and it just doesn't seem to move. So what are the learnings? Are we learning something from the PLI or tax breaks, new manufacturing investments get just 15% direct tax rates? That's like fabulous. And yet manufacturing hasn't grown. Has the government actually put in economists and others to think through what is it that we can do to fix the problem? The emphasis on green energy has been excellent. The government has been doing a wonderful job in focusing on that, and I think we are making good progress on that. I expect more to happen over there. There's another problem that I see, that the government has rightly spent a lot on infrastructure. But eventually, that has to translate into investments in the services sector, in the manufacturing sector. As that is not happening, what is the medium-term outlook on spending on infrastructure? We can keep on building roads till they take you to wherever, but they need to connect people better to spur better growth, to see more manufacturing or other economic activity to pick up. That's what's the problem.
Interesting. Let's see whether that does work out or not. Thanks, Mr. Vyas, as always, for joining us. Always a pleasure speaking with you.
If you like this video, then like, share and subscribe to ET Now.